Silver isn't rising on hype, it's rising on math. While we feel inflation at the grocery store and with insurances, the real story is playing out in government ledgers and central bank balance sheets. Here's why 2026 could be a defining year for this metal. Based on facts, not feelings. We don't experience inflation through charts. We experience it here. Prices keep climbing, not because things are becoming more valuable, but because the currency buying them is worth less. That's the symptom. Now let's trace it to the source. The source is a structural reality. The U.S. government spends far more than it collects. These deficits aren't cyclical anymore. They become embedded in the system. That leaves three choices: cut spending, raise taxes, or finance the gap. History shows the path of least resistance, creating liquidity, new money to cover the shortfall. This doesn't always return labeled as QE. Sometimes it's market support, sometimes it's emergency lending facilities, but the function is identical, expanding the currency supply to keep the system liquid. And when the money supply grows faster than real output, purchasing power doesn't disappear, it's transferred. The equation stays the same. More currency units divided by same real output equals dilution. The labels evolved, the arithmetic didn't. This is where silver's equation activates. It doesn't need bullish sentiment, it doesn't need earnings reports. As a tangible asset with finite supply, it naturally recalibrates against currency dilution. This isn't speculation, it's arithmetic. When the units of money multiply, hard assets absorb the excess. And this isn't just a U.S. story. Global pressure tightens supply. China's industrial demand, India's physical accumulation, and long-term de-dollarization trend all pull on the same limited resource. That creates a demand floor, independent of Wall Street narratives. In 2026, the signal becomes impossible to ignore. Silver won't move because people feel optimistic. It will respond to the same forces that always matter: persistent deficits, currency dilution, and global demand. Position yourself for clarity, not hype. Understand the math of your money.